Hey, what's going on, guys? This is Fire Trader from firetrading.org. I just wanted to show you guys just three simple, relatively simple swing trading strategies that you could utilize using equity, options, whatever it is you like to trade. You can use it, and we in the fire trading swing trading chat room we utilize these strategies quite often. And it's what I mean by simple is there's no fundamental research really. It's just you're looking at the chart. It's all technical based, and it's all using moving averages. And so the first one, we'll just dive into it. The first one is basically, you can look at the daily chart here, and you've got the 5 SMA and you've got the 10 SMA. Now, when the 5 SMA crosses above the 10 SMA, it's also called a golden cross. You take it long. You can buy some calls in it, and you can write it out until it crosses back down below it. When the 5 crosses back down below the 10, you can see right here. And then when it crosses back over again, you can take it long again, and then until it crosses back over. Or you can even take it short or buy some puts on it. It breaks it to the downside. You grab some puts, or you can short it till it breaks back over, and then you can grab some calls here when the 5 crosses the 10 and ride it on up. And you can literally do this on any stock, whatever your favorite stock is. We could look at I don't know, Square, for example. Anything, and all it is it crosses over here. You write it out until it crosses back over. And what you're doing is, because these are smaller moving averages, they're kind of closer together. What you're doing is you're catching the quick, fast, strong trend. Okay, and you're taking advantage of that strong trend to the downside or to the upside. And when the strong trend um, starts to exhaust itself, then you get out and then wait for them to cross back over again. Okay, so it's very simple. You could also use it on, so this strategy here on the daily using these moving averages are going to be, you know, they're going to take a little bit longer. Whenever we trade options with this strategy, we usually shoot for 60 to 90 days out, and we'll shoot for a delta of 30, and that's typically what we'll use. It just gives us enough time to let the stock work, give it room, and let it work in our favor. Another thing that you could do is use it on the hourly chart. What I like to do on the hourly chart is actually turn the after hours off, just to kind of get rid of all the commotion. But you can swing it on the hourly chart as well. When the 5 crosses the 10 to the downside, you can grab, with this strategy, you can even grab weekly puts. I'm not a huge fan, or weekly puts or calls. I'm not really a huge fan of playing weekly options, but I will. But I like to usually go a minimum of a week out, 2, 3 weeks out, just to give it time, so you're not getting quite hurt as much on the premium decay. But yeah, you can use it on the hourly chart. You can buy it weekly options, 2, 3 week out options, and ride it till it crosses. For this one, an example, you would have got good 3 days out of it to the downside, before it crosses back over. Okay, so that's the first strategy. The other two strategies consist of the hourly chart, and all they are same thing, using moving averages. You can do this. I like to use this one with the after hours off as well, just to kind of keep the clutter down. I know the moving averages are affected based on after hours movement as well, but um, basically when the stock crosses, so we've got the 50 and we've got the 200 SMA, actually 50 EMA and the 200 SMA. When the stock crosses above the 50 EMA, take it long or take it short, whichever way. If it breaks above it, take it long or buy some calls. If it breaks below it, short it or grab some puts. And you can swing it, same thing, just until it breaks back down below the 50. Okay, and then if it crosses back above it, you grab it long again and grab some calls and ride it on up until it breaks back down below the 50 again. And I like to use this on the hourly chart, and it's a very, very effective, nice, easy strategy. And the other one is the 200. the 200 SMA on the hourly chart. You know, if it breaks back, or if it breaks above it, take it long until it breaks back down below the 200, or buy some calls on it. And if it breaks back down below it, just swing it short, buy some puts on it, and swing it until it breaks back above the 200. Okay, guys, so I hope you enjoyed the video. Just three, you know, quick, simple swing trading strategies. You don't have to think too much into it. You can just look at the chart, look at the EMAs, see what they're telling you, and just take it on one of these moving average breaks and hold it till it breaks back down below it or above it. All right, okay, guys. I hope you have a great rest of your day, and thanks for watching.